Adam, do you know how a private equity group's partner, like if I'm a partner in a private equity group, obviously you laid out some names, KKR, Apollo, or BlackRock are obviously massive examples, not really playing in the lower end of the pyramid that we're talking about today. But if I'm a partner in a small boutique private equity group, how am I compensated?
So there's multiple ways. I'm going to talk about two concepts. Remember these numbers, 2 and 20. So when I'm a PE firm, my job is to go out and raise capital from limited partners. I'm the general partner. I create a fund. Now, let's say that fund has $100 million inside it, and I'm going to charge the people who invested their money into that fund a 2% management fee. Now, normally I don't send them a bill for 2% every year, and I don't take it out of the capital that they're giving me to buy companies. I get it from the cash flow of the companies that I bought. So I'm charging a 2% management fee. That 2% management fee is what I call a keep the lights on fee. So that's how we pay our salaries. That's how we pay for the electricity and for the fancy office we got in New York and the marketing material that we generate and our cars and our travel and our hotel bills. So 2% management fee is how we keep the lights on. That covers all of those base costs. How we generate wealth as a partner in a PE firm is for every dollar that I generate in profit, for a limited partner, I charge them a 20% fee, and it's called the carried interest fee. And so I charge them a 20% premium. So it's like, hey, I just earned you $1 million. I'm going to keep 200,000 of it. You're going to get 800,000. And guess what? That 800,000, when I say the average PE firm returns double the S&P 500, that's after I've paid the 20% fee, to the PE firm. That's net of fees. They're getting very good returns. And so the wealth of the partners is created by doing a good job, picking good investments, helping those companies grow, and then selling them for a higher price and returning the money to the shareholders less that 20% fee. That's where I generate my wealth as a PE firm partner.
And when do I get paid? You mentioned a 10-year hold period on a lot of funds, right? So if I'm responsible for the ABC fund at XYZ PE firm, and I've got a salary, I've got bills to pay, I'm assuming that's coming out of the 2% that basically
you have to live within your means. And so you have a salary, a competitive salary for your level within a PE firm. And so you're spending based on that. Your piece of that upside, that carried interest, normally what happens is, again, when a PE fund starts, it's got 10 years to live. Doesn't buy 10 companies or 12 companies on day one. It may take 5 years to find 10, 12 good companies. And so it's calling capital from limited partners as it finds opportunities. And then the money is being invested. And then as soon as the money's invested, I can now access, call it this 2% management fee every year that keeps me paying my rent, in Midtown Manhattan. And so now, though, as I'm growing these individual companies, so I bought one the first year, one the second year, two the third year, four the third, fifth year, whatever. It's like as I'm buying stuff, and then I've got about a 5-year window to improve these companies. As I'm selling them, then I am deducting the 20% as I'm making the returns back to the shareholders, or the limited partner investors. And so what happens is, if I'm an investor in a PE fund, which I am in several, during the first 5 years, the tide's rolling out. So I'm writing checks, I'm wiring money every time they buy a company. Adam, capital call, you owe us this much money, and I keep wiring it out. And so the tide's rolling out, all the money's flowing away from my hands. And then after the first companies start, all of a sudden it shifts. The tide shifts and it starts coming back in. And now as a company is sold, I'm getting a wire from the PE firm. And now I'm getting more wires as they're selling all the companies that they bought. So first 5 years, I'm sending them money. Second 5 years, they're sending me money. And as they're sending me money, they're taking their fees out and they're paying themselves their fees.